show you how to copy your coin in the fastest growing market in world history. In this third and last part of the Candlestick series, we're going to put it all together. Support and resistance, candlesticks, volume, moving averages, trends, and I'm going to show you how to leverage those items and that information to make a smart investment decision. And as always, fam, I'm going to ask you to do three things. Hit that subscribe button, hit that like button, and hit that alert button so that you know when fresh content is out from Copy Your Coin. All right, let's build. All right, let's get into this. This is the final part of this three-part series talking about candlesticks, basically in short technical analysis. And I talked about putting it all together. So right here I have the lines that I've drawn based on past charts, past moves, and I probably should go into a little bit of how I drew those lines. But if you remember, it was basically on the past resistance. So as you see, I drew a line here. I saw it connecting 2 points and drew it there. Same here with this one right here. This was going back in history. I could see that this line was coming back here. They had bounced here. So I started drawing a line here. Okay. As you see, we got to this point. We're coming down. And this is actually in history. So this is, again, it doesn't necessarily dictate future performance. But it gives you an idea, kind of insight, what my mindset is going into possibly getting into a trade. This is Ethereum over the US dollar. And this is the daily chart. So each of these candles represents one day. Okay, so as we see, I see it's going down, and this is back in March. And you see we were going down, hit our head right here, down past that resistance like we talked about in the previous video. Came down here. Now, what I want to draw your attention to is I looked at what immediately jumps at my eyes is volume. Okay, the volume spikes right here, meaning that bulls are stepping in to buy. Now, does that mean I jump in and buy? No, it does not. But it does mean that I'm starting to look, my eyes, I'm going to start to pay attention in the next couple of days and see what's going to happen. Is this a possible reversal of a trend? Okay, so as we start to keep going, and you can see, and I'll scroll over candle by candle, you'll see. Now we get another bullish candle. It's kind of trendless. So again, it becomes a line of demarcation where the bulls and the bears are basically trying to fight for control. As we go forward, I see you have two green candles, and what I'm immediately looking for, I see these two candles right here, is something, a candle to close higher than these are. So if I was really going silly with the lines, I draw a line right here. But I know visually I can see where it is, so I'm just looking for that price to be crossed. Now, if it doesn't cross that price, then it may cross lower. You know, that it could be either way. So that's why I'm waiting. So we go to the next candle, and you see again it's fighting. They're fighting right here. It gets to this point. Make sure you guys can see this. Gets to this point, and then it breaks out. This candlestick breaks out right here, and that's key, because once it gets here, then I know, okay, so this is going to move higher. So I feel like you got free movement higher till you get to this point. You know, this is our 50-day moving average, and also it's a mini ceiling, if you will, because remember we bumped our head right here on this line. So as you see, it gets to that point and pulls back a little bit, but I'm probably getting in right around here. Okay, so then I'm waiting to see what's going to happen. Whoa, look at that. We get past the 50-day. We're on our way to the 100-day. Will we get past that? I don't know. There's a day it goes back and we're not past that. Then it looks like it might. And sure enough, it does. So next thing you know, we get past that. So the next real point of resistance from this point is right here. This previous line, which was support, became resistance. So for a trade right here, I'm probably doing pretty good. I'm probably looking to unload my position here, unless I'm holding for the long term. which in this particular case I'm not. So I'm looking to unload here, probably in this direction right here. Probably the first sign I see that it might start to turn over, I'm probably running out. And there it is. I'm probably running out right there. Notice it looked like it was gonna run past and then got right past here. But what I want you to continue to watch. Let's see what happens. It's starting fighting. It's another fight. There's another line right there. And it looks like, is it gonna get past? It does. So what I wanted to show you on this is that just because no one can see the future. So when I saw this, I was selling my position, especially look at the volume right there. That was a high volume day, crossed right back over the 100-day moving average. There's no reason that it could have did this and went straight down from there. And I've been sitting there sick if I had my money and say, oh, I was going to sell here and I didn't. So you sell there, you're not going to get all the highs, especially when you're trading. It's just not possible. But that's okay. It goes to the moon, that's fine. You reset it and then you can go in again. But at this point, the risk versus reward isn't worth it. Let's say you got out here and let's say that you were like, well, I wish I should have got back in. I'm going to get back in here. But look, you're not going very far. It's like 720 to 87. I mean, that's not bad. Obviously for a trade, that's not bad. But it's not what it was. We were coming from 355 to 720. That's almost 100%. It is 100% actually. So you gotta always measure, what does it make sense for me to make that play? Okay, so as we keep going, we'll see that it doesn't quite get there. It turns over, and next you know, we fall and fall and fall. So this is just a quick example with Ethereum on the daily chart of how all these various signals, from the candlesticks to the volume to the support and resistance lines to the moving averages, all that paints a picture. Now, this is a unique type of thing because trading is very personal. And I say that because when I learned to trade, the teacher who taught me to trade had a lot more indicators than I use currently now. And this might seem like a lot to you. I've got friends who've been trading for as long as I have, 10 years, 10, 12 years, and they use even less than I use. They use maybe 1 or 2. That's fine. It's a personal thing. You got to figure out what works best for you. What I wanted to put this series together was to introduce those of you who hadn't never seen a chart before, and those of you who might have seen one but kind of wondered what I was doing. That's fine too. But it gives you an idea, it gives you some insight, and you can take it as far as you want. You can have 100 indicators, you can have 0. My word to the wise is try to do it with as less as you can, because sometimes when my friends like to talk about paralysis of analysis, and that can very easily happen. All these are mathematical formulas, and none of them are the holy grail or the silver bullet. Believe me, I've been down that road. No one's going to have some indicator that's going to tell you 100% of the time where this is going to work. But you got to find out what works for your personality. Trading is very much a personal endeavor in that way. So anyway, this wraps up for the charting. Hopefully it wasn't too technical for you. It wasn't too dry. So as we wrap up the last part of this 3-part series on candlestick techniques and candlestick charts, question of the day: do you feel like you have enough information to be dangerous to the market or dangerous to your account? I'll see you next time on Cop Your Coin.